Hello traders and welcome to a new day trading strategy video of mine. In today's video we're going to be talking about CVD, also known as the Cumulative Volume Delta, on TensorCharts.com. So for those who don't know what CVD is, it's this green line that you see when you go to TensorCharts.com. And if you want to change the value, the input of CVD, then the input can be changed to the left of price line, as you can see here, by just going down to here. That might change in the future if the settings get looped around, but for right now, CVD is located around here, as you can see. So the reason I'm doing this video today is I had many requests to talk about CVD over the weekend, and of emails I got, of questions I got, and of Patreon messages I got. I think all of them, not all, but the high majority of them had to do with CVD and of order flow. So I wanted to make a video that talks about cumulative volume delta in relation to price and volume. So to start off with, what is CVD and how is it calculated? Well, CVD's official calculation, when you read out an article or a book, is volume at the ask minus volume at the bid. So what this means is any volume that's transacted at an ask, asks are just words for limit sell orders, bids are just limit buy orders. So when you see volume that's transacted at a limit sell order, that's going to be a market buy. Any volume that's transacted at a limit buy order, that's going to be a market sell. So CVD in essence is just market buys minus market sells graphed on a line. So CVD is going to be calculated for all possible periods if the value is set to 0, the input is set to 0. CVD on TensorCharts.com default currently has the default of 0. I would recommend just keeping the default of 0 unless you want to change it to a certain amount of periods. For example, if you change CVD to 10, it's just going to calculate market buys and market sells for the last 10 periods. That could help with, I guess, looking at recent price action in conjunction with CVD, but CVD set to 0 would probably do that anyway. So I would just recommend keeping it set to 0. All right, so let's talk about how do we use this indicator in conjunction with price. When I say rapid rise here, and rapid rise and gradual rise, what I'm talking about is CVD, and I don't necessarily mean rapid rise in price. I just mean that a rapid rise has occurred in the CVD value, as you can see here. What constitutes a rapid rise? What exactly constitutes a rapid drop in CVD? I can't really make that clear because that's something a little bit more qualitative than quantitative. But basically, whenever CVD is flat or slightly rising, and then one way or the other it goes very high up or very much down relative to its previous changes, then that would be known as a violent drop or a violent rise in CVD. So when we see these rapid rises in the continuation of an uptrend, that's typically going to be overbought and bearish. What this means is if price is moving upward, and then all of a sudden CVD spikes, meaning heavy market buying relative to market selling, then that likely means that price has been overbought, and we might not be able to find enough demand to continue to press price higher, and price will likely move down. How about a rapid rise in CVD during consolidation? So this is typically going to be a potential bear shakeout. So what that means is price might be flat, consolidating, and if price suddenly goes up, CVD spikes and then goes right back down. That's actually trapping many retail positions. So what this is doing is shaking out shorts, shaking out any traders who wanted to sell by pressing price upward, and actually trapping any long positions up there. As price goes up, retail traders get excited, market buy, and fill the limit sell orders of institutions. So this rapid rise in CVD with heavy market buying and also hitting short stop losses, that shorts stop losses will also be market buys. So this rapid rise in CVD is likely going to be a potential bearish shakeout, and price will likely move downward bearish. So how about a rapid rise in the continuation of a downtrend? I said that this is rare. It's a little bit less common. So what I mean by this is imagine that we have a downtrend and CVD spikes in that downtrend, but price continues to move lower. This is probably just going to be a bearish continuation. If price isn't able to make any ground with a massive spike in CVD, then price will likely just continue moving in that bearish direction. So this is the rapid rises. I will say that more gradual rises and gradual drops in CVD, a little bit less clear and a little bit more context heavy, but it's these rapid drops and these rapid rises in CVD that allow us to enter some good counter trades. However, a gradual rise in CVD during an uptrend, typically more often than not, is just going to be a continuation of that uptrend. So a gradual rise in CVD would mean that there's slightly more market buying than market selling within that uptrend. And that's going to be the natural state of most uptrends. So expect a bullish continuation. A gradual rise in consolidation, so a gradual rise in CVD as price is just flat, that's typically going to be bearish. That could be a situation where institutions are trying to convince retail that price will move up, so that retail simply fills the limited sell orders of institutions by market buying them. And then price will likely move downward with a gradual rise in CVD during consolidation. A gradual rise in a downtrend, I just put this as neutral. So imagine that we have a downtrend just normally going down, but CVD is just slowly going up. This is kind of hard to say. More often than not, I would say this is probably bullish as a divergence, volume isn't moving with price kind of situation. But I put this as neutral because there are other types of situations where a gradual rise in CVD as price goes down could just fuel more bearishness. So this one, I don't know. I would say this one's a little bit more up in the air. So how about drops within CVD? So how about a rapid drop in CVD in the continuation of an uptrend? So price is moving up, and then we see a massive spike downward in CVD, but price continues to move up. It's not staying, but prices actually continue to move up. Again, this is going to be a little bit more rare because typically most traders, institutions, a lot of anyone really, isn't going to be market selling very, very rapidly and panicked when price is moving upward in just a regular uptrend, because it would be more logical to just put a limit sell order and get that filled with no fees or get that filled with low fees instead of trying to market sell when there's high demand anyway. So that's why we're probably not going to see that rapid drop in CVD. If you did, that would mean that there's heavy market selling relative to market buying. If price isn't able to really make any bearish ground, then price will likely just move upward. This is the exact same case that we talked about right here. How about a rapid drop in CVD during consolidation? Well, imagine that price is here, springs downward and comes right back up, continues to remain flat. That could be a potential bull spring shakeout. So this could be where retail traders are trying to accumulate positions for an uptrend. And what institutions do is know where their stop losses are, press price down to their stop losses, and when that occurs, those retail traders panic and sell, their stop losses are hit. Some of them even short when price goes below consolidation. That's going to fill a lot of liquidity for institutions who are wanting to buy at a better price. So that's what's likely to happen with a rapid drop of CVD within consolidation. Rapid drop in the continuation of a downtrend is quite textbook oversold, which would be quite bullish. That's why it's green here. Price is moving down. We see a period of heavy market selling. Price will likely go flat or move up. More often than not, move up. So why exactly does the rapid drop in CVD lead to oversold and price going up when we're in a downtrend? Well, how is a downtrend going to continue moving down? Well, a downtrend is going to continue moving down as supply is greater than demand. There are more sellers than buyers, theoretically speaking, and there's more bearishness than bullishness. But there comes a point in every trend when traders who wanted to sell have likely already sold. And that's probably going to be what happens when you see a rapid drop in CVD, because that heavy amount of panic market selling is likely to lead to an up move as many retail traders sell down to a level where price is much lower than demand dictates. So what I mean by that is price might sell all the way down to 8K if it was previously at 8,100 with a rapid drop in CVD. But what might happen is there's no one willing to sell at 8K. No one wants to sell at 8K, so price will naturally just move right back upward. And that's what you're going to see with these oversold kinds of markets with really no supply, meaning no one wants to sell, and high demand because traders know that that level is too low for price to continue moving lower. So that's what you're going to see with that rapid drop in CVD. And the same type of theory applies for an uptrend. Price is moving upward, rapid spike in CVD, and price can't really move much higher. Many traders who wanted to buy in the short term have already bought, and the only reason that price would likely move higher would be if we were able to find more buyers to continue to buy the trend. And it's more likely that price will be stagnant or move down. So how about a gradual drop in an uptrend? So just gradual fall in CVD as price is moving upward. Well, this is going to be more context heavy again, more neutral, probably slightly more bearish than bullish, if anything. But I can't really put anything to this. Same thing here. So how about a gradual drop in consolidation? Typically going to be bullish. CVD is slightly falling off. Retail is market selling. More likely than not, price will move upward. Gradual drop in CVD during downtrend, just bearish continuation. If we see slightly more market selling than market buying, that's a healthy sign for a downtrend to continue. And that downtrend will likely continue to two things happen. Might reverse that trend if price is moving downward. Either A, price is going to massively drop downward and CVD is going to massively drop. Many traders panic sell, then price goes up a little bit, and then price goes into an uptrend. Or the second situation would be price is moving down, 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 and then all of a sudden it just moves up and moves up in high volume. Then that would likely be reversal as well. As long as CVD doesn't spike, then that might be reversal. And that's the two potential types of reversal when you see a gradual drop. And then you might either see a rapid drop or just high bullish momentum eventually. All right, so now I want to look at some examples of what we've talked about before of these rises, spikes, drops in CVD in conjunction with price and volume. So I see 4 different CVD spikes / drops that are kind of interesting here. If you want to take just 5 seconds to try to label these, you can go right ahead. All right, so some of these might be a little bit harder to see, but this market formation looks like heavy market selling and price goes up. So this is the first one that I noticed. Price goes a little bit below support, but price does not have enough fuel to really go much lower below support. It actually consolidates a little bit below. We see a rapid fall off in CVD, and not only that, but as price goes up and then begins to climb back down, we see another fall off in CVD here. So this is showing us that many traders have already sold. So this is probably a pretty good spot to buy. Price naturally goes higher after all those traders sell. So price here, this is probably the most obvious, the most violent action that CVD had taken. There's heavy market buying from here to here. Price goes up here, but it doesn't really go up that much. I see a high tail here. I see a high tail here. Small body, and volume spikes as well, as you can see down there. This just looks quite textbook bearish reversal. It doesn't look like the bulls are going to be able to continue this any higher, especially this spike in CVD that just adds logs to the fire or fire to the flames or whatever that saying is. Because after this spike in CVD here, this looks quite bearish, and especially with this reaction. But then when you see another high tail with another massive spike in CVD and price isn't able to make any significant new high, this is going to be bearish. So here we see downtrend. We see a quick down move below support, potentially triggering some stop losses here. Just like this trade, this market move potentially triggered some stop losses here, right below support, right? And after we trigger those stop losses that you can see evidenced by that, rapid fall off in CVD, many stop losses being hit, price goes right back up. And one last drop in CVD, so price just continues to go upward here. This downtrend may have continued, and it would have continued if CVD perhaps hadn't have spiked this far down, because what that means is that many interested traders who wanted to sell have likely already sold, so there might not be enough fuel for this to go lower. It also shows us that limit buy orders might be aggressive here, that traders and institutions may be placing their bids, their limit buy orders quite high up and wanting to get them filled, high demand. And that's why price can't go much lower, because that high demand. So how about this one here? And especially, what do you think is going to happen after this? Let me give you guys 5 seconds to guess what's going to happen to price after this formation here. All right, so if we were just to use the textbook rules that we had back here, we see a few things here. Rapid spike in CVD and price just really goes nowhere, as you can see. Many traders had bought, and we need to go back down before we go up naturally. Then we see a massive spike in CVD here with price going up on Decent momentum, but seeing some heavy limit sell order resistance, as you can see here. And then price goes downward. And as price goes downward, we see some 1, 2, 3 violent drops in CVD before price goes back up. Now we get this. We see these yellow lines right here represent limit orders that are over 100 Bitcoin. So when we see these prop up, we know that price is likely going to have a harder time moving in that direction. So here, price is going to have a harder time moving upward. Here, price might have a harder time moving upward. So here's actually where price moved downward. So if you had answered bearish, then you would have been correct. Here what we see is price is not able to go upward because a massive spike in CVD, many traders have likely already bought into this trend. We're going to have to go down at least before we go up if we want to pick up more demand. Yeah, as you can see here. And then also what I want to say is this limit sell order and this volume spike right here. So price goes down. All right, so how about this one here? This one is a little bit different, I will say. So do you think that this is bullish or bearish based on what we've talked over? So I know this one might seem a little bit tricky, but this was actually quite bullish. And I know this runs contrary to the rules that we put out before, but we do have a few more rules that I want to talk over before I end this video. Price does continue moving upward after 8,600 right here, and price continues to move higher. Why? Well, if we were to categorize different types of bullish moves into 3 types, we have the strong, large bull moves, average, and the small. And we combine that with a violent spike in CVD, we can get some interesting results. So when we see a large bull move, price moves, that means that price moves far beyond resistance here. We're not getting any stop loss hunt where price goes here, hits stop losses, and then goes back down. This is not a stop loss hunt. This is just a genuine uptrend. Price probably faked out some traders here before moving upward here because it triggered stop losses down here. And then price goes up after this limit buy order props up as well, as you can see with that. So we see that large bull move and price moves far beyond resistance, but we also see a spike in CVD. That is actually going to be very strong bullish sign. However, and this goes back to the rules, when we see an average bull move or a small bull move, this is what we get. An average bull move with a violent spike in CVD is typically going to be bearish more often than not. And a small bull move with a violent spike in CVD is typically going to be very strong bearish more often than not. When I say small bull move, what I mean by that is a bullish move that has one of 2 properties. Either a very small body where price just isn't able to go much higher but CVD spikes, or a small body, high tail. So price makes a tail that goes much, much higher, and that would be also a small bull move. An example of that would be, I think we had one here. We see high tail. So small bullish body, small body, but a lot of market buying. This is not a good sign for the bulls. And price is very likely to move down after this. And it's going to have a harder time making new highs. So we can see that one there with that small bullish move with a violent spike in CVD is going to typically more often than not be met by a strong bearish move. An average bull move, all I mean by this, by average, quote unquote, is when we have an established uptrend, price is moving up, and then just more of an average move where the momentum's not, I think, anything to write home about. But you see a spike in CVD, that's not a good sign for the trend because that shows that many traders are likely buying into the trend and that demand might be at its maximum. And traders who know when demand's at its maximum is when you never want to buy. Because demand is going to be at its maximum at a market top. Supply is going to be at its maximum at a market bottom. As at a market top, everyone who wanted to buy has bought, and at a market bottom, everyone who wanted to sell has likely sold, theoretically speaking. So this is what we're going to get when we see a violent spike in CVD in conjunction with some more bullish moves. How about a violent drop in CVD when we see some bearish moves? Well, a large bearish move, price moves far beyond support, so much lower than support, but we get a violent drop in CVD as well. That's going to be likely met by strong bearish continuation. Price will just move lower, just like these kinds of bullish moves are likely going to be met by continuations. Average bear move, so just downtrend, average bear move, but a crazy spike in CVD downward, violent drop, excuse me. That's going to be typically more bullish than bearish. So expect a bullish move, a bullish retracement, or even a possible reversal. And a small bearish move, so that's the same thing as just bearish move with a very low tail, or just a small bearish body, candlestick, with a violent drop in CVD is a strong bullish sign. So let's go over some examples here. So what do we see here? Well, a few things that we see are, rapid spike in CVD, price naturally moves down. Rapid spike in CVD, price naturally moves down. These are more average, I would say, bullish moves. And you might say, doesn't this look like a very strong bullish move? It goes up around $100. Price has to move far beyond resistance for it to be labeled as a strong bullish move. Price does not move far beyond resistance here. It doesn't break this high, and it barely breaks these highs here. So this could be a stop loss hunt for these highs here, as you can see. So we get that rapid spike in CVD and price does go down. But here we see a rapid fall off in CVD, very, very low, but price has high momentum to the downside. And then we see a spike in CVD to the upside, but price doesn't really move that upward that much. So is this bullish or is this bearish? This type of pattern. I'll give you guys 3 seconds for this. So this is actually very bearish. When you see that rapid spike downward, rapid drop in CVD as price drops quite quickly, right here, large bear move, price moves far beyond support. That is a strong bearish continuation likely to occur if we get a violent drop in CVD. Price moves far beyond support. I think there's no argument there. Support's at about a little bit above 8,600. And price moves to a low of around 84, I think like 8460, 8470 here, which is significantly below support. And we get that strong bearish move, so naturally we get a downtrend. How about this one though? I will say this is a little bit tricky and a little bit different. But do you think that price is likely to be bullish or bearish based on CVD in conjunction with this rapid drop from here to here? Maybe you guys 3 seconds for this one. Yeah, so this was actually quite bullish. Price moved upward. Why? Well, when we see a large move, we are expecting to see a large drop in CVD to see a lot of market selling. Because if we don't see a lot of market selling and price moves much, much lower, then demand might not be present at these lower values, right? Because if not many traders are interested in selling here, then why would many traders be interested in selling at an even lower price? Right? So with this more gradual drop in CVD, as you can see here, and then actually this beautiful rapid drop in CVD, but price makes a tail all the way down, and we get a large bid wall that's a limit. A lot of limit buy orders are around 8,100. This is just quite bullish, and price does go much higher. So if we were to amend this kind of thing, I would say a large bear move is going to be quite bearish if you see a violent drop in CVD, but when you actually see not much market selling relative to market buying like this is not a lot of market selling. This is when you get those kinds of bullish moves where price just fakes out one side and then goes the other side, as you can see here. And this is a genuine spike, price goes down, genuine drop, price goes up, genuine spike, price immediately goes down until here, and then price just does nothing based on CVD. So how about combining CVD with one of my favorite indicators, which is sentiment, especially the long percent sentiment. So this is just going to be how many longs there are relative to longs and shorts total on margin data for Bitfinex. So long percent sentiment can be interpreted in a similar manner to CVD. Higher confluence and crowd bias as sentiment equals position data. So using these in conjunction with each other is going to just give us greater confluence and greater probability in our trades. So, like I had said before, when both CVD spikes and long percent sentiment spikes, that's quite a bearish sign. When both CVD massively drops and long percent sentiment massively drops, that's typically going to be quite bullish. Again, if you see a rapid drop in price as sentiment goes down and as CVD goes down, that'll probably just be a downtrend. But when we see these more average moves or these low tail moves or these moves that don't really move at all, and we see a rapid drop in CVD and a rapid drop in sentiment, that we know that price is typically going to be bullish and reversal is afoot. Let's take a look at this example here. We see a volume spike and a massive spike in sentiment on Bitfinex. Here we also see, if we zoomed in and looked at TensorCharts.com, CVD, I see some limit sell orders being propped up here, right? Limit sell order, and massive spike in CVD, and then another massive spike in CVD here, 2 spikes in CVD with volume spikes as well. This is quite bearish. This is representing that demand might be at its highest during the uptrend, and demand is at its highest when price is typically at its highest, at its market top, and price goes down, as you can see here. And again, we see another spike in sentiment and price cascades down, not surprisingly. Let's take a look at this example here. So just to say a few things that I have noticed. Rapid spike in CVD, and then a rapid drop off in CVD. So this is just going to be lots of volume being transacted very quickly. We're probably going to see some consolidation, as you can see here. But what we see during this consolidation is more market selling than market buying. So naturally, the market goes up, as it's more likely to, because we see more selling than buying. We get this stop loss hunt to trigger any stop losses down here. And then we get this stop loss hunt to trigger any stop losses that might be here. Price goes up. We get a spike in CVD, however, and we get a spike in sentiment, though. And this is where price turned quite bearish from here all the way down to here. From about 84.50 high to a low of about 81.75 price moved down to. Because so many traders had bought in, just like with this example here, and here, same thing had occurred here. Many traders had bought in here, and price couldn't pick up enough demand to go much higher, couldn't create significant new highs, and then price moved downward here. So I know this was a crazy long video, but I think it's an important video when it comes to looking at TensorCharts.com and looking at the data that we have here, because this is my favorite order flow website, of course, and also my favorite order flow tool is CVD. And the thing I like about CVD is that it's so simple in itself. It's just market buys minus market sells graphed on a line. Really nothing more to it. Many other indicators like RSI, MFI, MACD, those are derivatives of price and derivatives of volume. This is not a derivative of either. This is actually just raw volume data. So that lack of derivation is actually quite nice because it gives you really an indicator that doesn't have any lag. It's present values. So that's quite helpful. So yep, hope this video was helpful for you guys, and happy trading.